Okay, everybody, here's the final watch list of March 2026. So let's go ahead and take a look at the economic report. Monday, I am a little concerned on the open because Jerome Powell is going to be speaking 30 minutes into the market open. So part of me is thinking that we should just sit and wait for that speech to end because the algorithms are going to pick up on his commentary and decide whether or not to go long or short the market. So I'll be here Monday morning for live trading, but I don't know that we're going to take a trade after 7:30. So that's fine. I mean, we got about an hour in the morning, but it could just be market chop. So we'll have to see how that goes. Tuesday, job openings, consumer confidence. Those are important numbers. Case-Shiller home price index. Not too worried about that. I mean, home prices are starting to come down because the number of sellers is 2 times the number of buyers. We literally have no buyers in this market, and people are Googling more now how to sell your home than they were during the financial crisis. Okay, so that is going to be super intriguing. Wednesday, we're going to have U.S. retail sales. Again, that's a delayed report from February. Not too worried about that. But ADP jobs numbers. The entire market right now, inflation and jobs. That's going to be super important along with U.S. manufacturing, PMI, ISM manufacturing. Those are going to be the ones to watch. Thursday, jobless claims, U.S. trade deficit. Again, more important numbers. And then Friday is Jobs Friday. And so everybody's going to be watching the unemployment. What is the unemployment rate? It's been ticking higher. Is it going to keep moving up? And then what's happening with wages? Now, the one thing that's going to derail the market before any of this news is what's going on with Iran. And if we put boots on the ground, the market is not going to like that. And we are at a clear inflection point that we need to hold support where we're at right now, or there is going to be a lot of downside pressure yet to come. Let's take a look at companies that are going to be announcing earnings. Nothing major. The only 2 that might be worth watching are going to be Nike, which I'm not too optimistic on, and Restoration Hardware. But other than that, nothing that's really going to move the market, but these 2 consumer names could be intriguing. So let's go ahead and take a look at the charts. As I said before, SPY is at this long-term support level that we were able to close the daily candle above my price level, but you'll note that we are going all the way back here to this pivot low at the Liberation Day announcements. Okay, no, I take that back. No, this was August 2025. It's actually later. Okay, so Liberation Day was actually pretty much a similar down draw to this. But we are right back at that inflection point. So here's what I would be watching. 1, are we going to now break below this candle low right here? If we break below 633.11, there's nothing holding this market up until we technically get all the way down here to on a overall supply and demand at the institutional levels, 628. Okay, and that's going to be on a 3-hour time frame. So I'm going to go ahead and switch to the 4-hour so you can see this better. And we're pretty much right on the money right here. We can literally drop from 633 all the way down to 627. If we lose this 627, so this would be worst case scenario, right, where liquidity is going to draw to. Now we'll probably get a stopping point along the way here where I would be careful and just watch for a potential bounce. 629 and change. But if we get below 633, I'm in inputs. I mean, there's no question. If you really want to be conservative, here's the actual candle low at 632.94. But again, nothing holding the market up. So look at liquidity on different time frames. A 30-minute and a 45-minute zone is not that strong. Okay. So when I'm watching, though, these 4-hour candles back here, okay, this is the pivot low on a 4-hour candle, the market already broke it. So now it's just holding up on an overall bounce of demand. This is most likely going to head lower if we don't find stability. Let's look at the same thing with QQQ. And you'll note that I am moving the lines, right? I want to see where we at and where might we bounce, okay? Different time frames. Same thing here. If we get below the 4-hour candle low, we have how many zones holding us up? Well, we have 1 hour, 3 hour, 45 minute, 30 minute. Not that strong. We don't have any 4-hour, we don't have any daily, and we don't have any weeklies. So you get below 558 and change, and we can run all the way down here to 553. So this is where I would just rather sit and be patient. Don't take shorts or puts going into demand. Take your shorts here. So maybe you don't get a trade on Monday. Maybe you don't get a trade on Tuesday. Maybe you get this trade on Wednesday that allows you to break this, retest, go here, and you just made 400% on the trade. Okay? So the rule of thumb is don't fight the market where we have overlapping liquidity. I mean, yes, we can take puts, but the put trade was way the heck up here, right, in supply. The put trade is not here in demand. The next put trade is once you break below demand. So the sooner you recognize that and just sit and do nothing, you will have exponentially higher winning trades, okay? And you can see the exact same thing here. Let's break below. Again, this is going to be the weaker of the two. So I like SPY puts much more than I like QQQ puts because we have lower levels of buyers and there's not as many of them. Now, if I want to go in calls, what do I need to do with calls? Well, I probably need to start getting ahead of some of these, in my opinion, 4-hour candles. Now, is it going to be just take a call if you get above the 4-hour candle? No, but that is going to be your highest probability to go higher. You can go ahead and take a call once you get above the 1-hour candle, right? And we can go ahead and chart that and say, well, I want to get at least above 635.35. Otherwise, there's nothing. Now, knowing we could push it up to 637 and then reject, but you get above 637, you have more visibility. So when you're looking at your charts, first off, you have to understand where the buyers and the sellers are currently sitting, okay? Here is going to be actually the 564.59. Now, again, if you want to take calls, we really need to get above 563. But are you going to take calls for a dollar move, or would you rather get above 564 and go all the way for a $2 move? I'd rather take a $2 move. But understanding where you're at within the candle structure, super important. Let's take a look at some of the individual names. I'm going to start with Apple. Pretty much same thing here. This one's been stronger than all the others. Again, if we want to take a look at some Apple calls, even though my 1-hour pivot, I have another one right next to it, I'd rather get above the higher of the two. Take it to where? The next 1-hour pivot. Where are we coming down here? All the way down to 246, okay? Which is going to be a 4-hour candle low. Now, technically, this is the pivot low. The body of this candle is lower than this one, but the wick is down here. Okay, so this is where they were able to draw liquidity to. Now, I know that we are in demand, but it's only a 45-minute demand zone, so it's not exceptionally strong. So I would be fine with, again, if we can get below 248 and change, taking the put trade, knowing that we can push somewhere down to 246.62 to 246. So those are my levels I'm going to watch there. Let's look at Microsoft. It's been horrific. No bounce coming. We're right at another inflection point, 355.67. We break below that. I like puts. We do have a gap up above. You can also see, though, that we are in heavy demand. So I really need to break this level with some strength, retest it in order to push low to 350 to 344. Okay? Now, do I like calls here? If the market's strong and we could hold 355, I'm good with a call trade. Okay, because I know that we are in heavy demand and I'm at a price level. Let's look at Meta. There was a trader last week on Wednesday that went into some Meta. I believe it was the 550 puts. He went in with a $7,500 position, and that $7,500 went to $1.1 million. I mean, that is the power of options. Okay, so Meta, we have another gap below. That's what this market has been attracted to, are the gaps. We have a gap above. I don't see that filling anytime this week or probably next week, but you never know. So I do want to get above a 4-hour pivot to the upside, 4-hour candle low to the downside. If we get below the 4-hour candle low, watch for a bounce at the top of the gap. If they start to get into the gap, let them go in it, retest the top of the gap, come through it, fill it to the downside, and then there's room to 479. So you'll be able to see, again, you should be leveraging, again, the institutional software for buy-sell. If you do, you will have much better clarity on what's happening. The other things you can do too is if you want to turn off the lower time frames, okay, and just take trades at the higher ones, there is nothing wrong with that. And you'll see behind the scenes that it's getting rid of a lot of the overlapping buyers and sellers. Now, the danger in that is that it could bounce at any one of those levels. But I've been observing that once we are breaking 4-hour levels, the market is really struggling to reclaim a 4-hour in one direction or the other. So you could also see, right, top of this candle, I personally prefer the top of the 4-hour, but 6 of one, half dozen of another, okay? Same thing. So there's your zones. Again, buyers, sellers. Meta, it's already made its move. I wouldn't trade it. Let's look at Nvidia. Nvidia, another nice push down. A couple small gaps up above. Really big indecision candle here. So in order for me to go calls, I want to get above 168.27. Puts below 166.55, where we also have some nice room to the downside. But you'll note, again, the same thing here, guys. Buyers and sellers on top of one another. Don't get caught up in the middle of this mess, okay? It's just why you're getting wicked out of so many trades. So if you're going to trade an individual name, go somewhere where you don't have as much overlap. Now, the one that I do like, again, and I talked about this last week and I missed the trade, was on AMD because they really want to hold this 200 level. But look at what happens once we can start to hold these pivots. You have black space to work up into. Now, 30 minutes and 45-minute zones, right? You can clock those if you want. They're not, I'd rather do the 4-hour personally, but the 45 and 30-minute zones are not that strong. So if you can get a push to the upside, especially, again, if you want to be ultra conservative, go ahead and chart the 45-minute. Go ahead and chart the 30-minute zone. Okay, this is just an ultra-conservative way of doing it. And when you get above these, you have nothing but smooth sailing all the way up to 218. This is the type of trade I want to take. Or you get above 203. There's really nothing. There is this little daily gap here that I can see, right? It's so minuscule, I didn't even chart it. But if we can get above 203 and then look at the buying pressure on Friday, they pushed it down, they really moved it right back up. So this is an anomaly within the market overall. So I really do like potentially calls in AMD if we can get above, obviously this 203 is going to be where they keep wicking it up to wicking, right? And they keep pushing it down. But if we can build a base in here, then we should be able to move higher to the upside. Let's look at Tesla. Again, this one's had a lot of strength, but when it flushes to the downside, it really gets going. Same thing. We only have 30-minute layers of buyers here. If we get below these, then we're coming down into the 350s, 340s, and then there is a gap fill down here below at 340 some and change. We have a gap up above, so if I'm going to trade this on Monday, then we might look at it on Monday. We'll see what it's doing in the pre-market because this one was holding up pretty nicely. I'd really like to see us at least be able to get above a 4-hour candle high. Again, this is ultra conservative, okay? The higher the time frame for the candle, the stronger the level is going to be, or below it. So when you're trying to trade off of 5-minute candles or 1-hour candles, yeah, they work, but they're just not as resilient. Because look, for all of these candles right here on a 1-hour time frame, right, for 3 hours, it's just consolidating. We can get above this or below this. We have room in either direction. I also want to take a look at Amazon. This one, Again, insane selling pressure. We do have a gap below here. I'd really like to see this gap fill. I'm not a buyer right here at this point in time, and that's just predominantly because of the extreme weakness in overall tech. I don't think this market is going to bounce like it did from Liberation Day. I think there's been a lot of underlying damage done, and until the bond market calms down, we are not going to see tech stocks move higher. Now, again, you could decide ultra conservative, use the higher candle pivot. Okay, so I typically like to use the 4-hour, which would tell me that it's going to be down here. But this is going to be somewhere in that FAFO zone, right? Where you can see that we have a whole degree of sellers that are sitting here. You really want to get above the lowest level supply to really move up higher. So these are the levels that I would watch, and that's exactly how I would chart it. Okay. Let's take a look at Palantir. Same thing, we're within this 4-hour. We get above the 4-hour, I like calls. Below this, definitely puts. We could come down here to 138. We do have a gap up above, but right now, I really would like to see us get below 138 and just trade in this black space and just trade this thing lower. So just being overly patient. PayPal. We'll look at a couple other ones that I reviewed a couple weeks ago. Again, if we get below 43.33, I think this makes for a good put trade to the downside. Lots of open room down to 41. Disney, I wish I would have caught this one before. This one filled our gap to the downside. I mean, look at this. I mean, just picture perfect. This is why we chart gaps, okay? So what I'm going to do is I'm going to get rid of the gap, and I'm going to observe now this 4-hour candle high, which is where the overall supply is. If we can get back above this, then we can go ahead and look for calls. I do have a gap right here on the daily. I'm going to go ahead and put that on the chart. I want to watch this 4-hour candle wick low for potential puts to the downside. And this has room all the way back down to 88. So if we see weakness in Disney, consumer discretionary, right? Are people going to be getting on an airline with the issues with TSA? Are people going to be going to Disney if inflation is going up and unemployment is going up and people are losing their jobs? But if you lose this, we have some nice room to the downside. So definitely keep an eye on that one as well. I said Nike. Let's look at Nike. I didn't chart it, so let's just see what it looks like. Pretty horrific, right? We are just breaking every level yet again. Let's go back out here, and I'm going to turn this off so I can get a little bit better visibility. I'm going to go to a weekly, and you can see, I mean, they've just blown through this prior weekly low here, which was in April. So this price level can go away. You can watch where it's held last week's low. Then on a 4-hour time frame, what would I want to see? I wouldn't even go in calls. I just, it's not even in the cards. I don't see anything good for Disney. Let me see how far left I have to go. Yeah, this is a problem, guys, right? This is like a stock, or for Nike, right, that you just don't want to be owning. I mean, look at this. This is just craziness, right? So let's go ahead and we'll grab a price level here. I'm gonna take this low just because it looks so bad. But I don't even think you can buy equity here, and I don't know that I would want to short it because it's probably long term really oversold to the downside, but I don't know that you're going to get a catalyst to go long. So watch for stability here in this area, and then potentially you can do maybe an equity add, long term, back up to 60, 70, maybe 80. But right now, this chart is just like everything that you don't want to see. And then obviously all these price levels up here are no good. So in order to really say, well, where's the first point of resistance going to be? About 54. So what, about 5% higher? But it needs to stop dropping. And clearly That has not been the case. I mean, look at this record: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 13 days of just downdraft where the stock has just continually kept closing to the downside. So we need to get back up definitely above 54 and change for this thing to have hope and a prayer. Same thing probably with Lulu. Yep. You know, and again, this is what happens with consumer discretionary. As soon as the market is weak and sniffs it out, they just sell these things. And it doesn't matter what the sales are. It doesn't matter what the revenue is. It's just, it goes to show that it's just brutal. Yeah, this thing I think can go all the way down to 128. So if I was going to trade Lulu, definitely puts, take it below the candle low from Friday. There's really nothing that I see that is giving me pause to say that they're going to hold this up. Look where they drew it down all the way to the last time in March of 2020. This is COVID lows, okay? So that's probably where this thing is heading. That's an ugly one. Again, just have some patience. I'm not going to do a ton of charting because things have been just crazy going into Sunday night and Monday market open. Keep an eye on Bitcoin. Bitcoin right now at 66. Robinhood has been dropping. We'll see if it finds some overall stability at this price level. MicroStrategy is actually holding up better than what I would have thought. But right now it's just risk off across all asset classes. So it's not like they're getting out of stocks and piling into Bitcoin or even silver. Let's do silver and gold. Same thing. I mean, just selling. Look, we were at 109. So we had some gaps up above, but they're not buying silver. They're not buying gold. We're just kind of stuck here right in this channel. In this one, I'm not going to trade. It's just so manipulated. Every time I take a trade in it, in all honesty, I just lose money and I just get annoyed beyond all belief. So you can see what's going on. We're between 60 and 66. Yeah, I'm not even gonna waste my brain cells trying to fathom what they're gonna do with this because it's just so manipulated. It's evil, right? So just figure out where is your channel, right? Trade around the channel to the upside, to the downside, and you could just see how this is playing out. So, okay. With that, I will see you all tomorrow morning for live trading, and we're going to see if there's maybe a trade in the first 30, 45 minutes. But once Powell starts talking, I'm done. I'm not going to try to trade. I'm not going to sit around and watch. Let him do his thing. Let the market do whatever it wants to do, and then you can come back later in the day and look. If not, let's come back Tuesday. But the one thing I've learned is when you try to trade news flow with very important people talking, and you guys saw this last week with Trump talking, total disaster in the market while he was talking. Up, down, up, down, up, down. I mean, people getting knocked out of positions left and right until he finished, and then the market just dumped lower. So let the speeches happen. Come back once the narrative is clear as to what they're thinking. I promise you, you are not going to miss a trade. So with that, have an amazing week, and I will see you all in the morning. Take care. Thanks for watching. If you haven't already done so, make sure you sign up for the free weekly Watchlist emails to get early access before the video drops here on YouTube. See you next time.